In Chapter 7, we're going to study long-term assets. We will do so according to the life cycle of an asset. We begin with the acquisition. In Part 2, we will study the use of the asset. And finally, in Part 3, conclude with the disposition. To begin, let's understand the question we must answer in the case of a cash expenditure. Our assets are going down, and we must keep the fundamental accounting equation in balance. The question is how? There are two alternatives. For an expenditure, the alternative accounting treatments are to either record an expense on the income statement or an asset on the balance sheet. If we record an asset, we are said to have capitalized the expenditure. In terms of the fundamental accounting equation, our two choices are cash is going down. We either have reduced our earnings, we have incurred an expense in the current period, or we've simply swapped assets. For the cash expenditure, we replace that asset on the book with a new productive piece of property, plant, or equipment. How then are we going to determine whether to expense or capitalize? The answer lies in asking the question, to what period does the expenditure's benefit relate? If the expenditure benefits only the current period, we will record an expense. Examples include paying wages for services provided in the past, paying advertising for commercials run in the past, things along that line. If, however, the expenditure produces a benefit that will extend beyond the current accounting period, we will capitalize the asset. Key point to remember is ask the question, to what period of time does the expenditure relate? Will the expenditure produce a benefit that extends beyond the current accounting period? If so, we're going to capitalize it. We're going to record an asset. If we record an asset, we also have to answer the question, at what amount should the asset be recorded? The answer to this is that we will record the long-term asset at its cost, plus all expenditures necessary to get the asset ready for use. An example, assume we paid $100 purchase price for the asset, and in order to get the asset to us, we incur $5 in shipping. Easily we understand that the price really is $105, but we don't stop there. If the asset is not ready for use until it has been installed and tested, we have to include the cost of the installation and testing as well. In that case, the total cost capitalized is $116. When we review a company's balance sheet, we want to understand and be able to distinguish between what types of assets are tangible and what types are intangible. Asset is one which has physical substance. Examples are land, buildings, machinery, and equipment. Intangible assets, in contrast, have no physical substance. Their value lies in legal protection. Things like patents, trademarks, and copyrights are example. With respect to any type of intangible asset, understand that those things which are developed internally are expensed as incurred. There is no asset. An example would be a pharmaceutical company's R&D. Research and development costs to develop a patent are not recording as an asset. They are expensed because it is difficult to determine whether or what portion of the R&D will benefit future periods. This is accounting conservatism at work. In the case of the pharmaceutical company, we're not certain that we'll be successful in identifying a new drug that will be approved by the FDA and available for sale to the public. Goodwill. Before we discuss goodwill, understand it's not the term that you're accustomed to identifying with the thrift store. In the context of an accounting balance sheet, goodwill refers to the value of a company as a whole over and above the value of its identifiable net assets. This emerges from a company's reputation, its trained employees, and management team, its favorable location, or any other unique feature of the company that doesn't pertain to a specific asset. It is recorded on the balance sheet only when the company is purchased as part of an acquisition. In the case of an acquisition, goodwill is recorded at the purchase price paid for the company less the fair value of its identifiable assets. In terms of a journal entry, let's assume that we are acquiring a company, and perhaps that company is Facebook. Let's assume that we are going to pay $20 in cash, and we're going to assume $5 of liabilities. The identifiable tangible assets will be recorded at their fair market value. Intangible assets, such as patents, trademarks, copyrights, will also be recorded at their identifiable fair market value. The liabilities assumed will be recorded based upon their value. The cash paid will be recorded. We can see that really we've paid $25 for the company as a whole. The tangible assets we required, if the identifiable fair value is 17, they will be recorded at 17. The identifiable intangibles will be recorded at their fair value. Let's assume it's 2. But in the case of a Facebook, we know much of its value lies in the subscribers, those members who have accounts and who are targets for advertisers. That would be the reason why a company is willing to pay $25 when all it's getting in terms of identifiable land, buildings, machinery, and equipment is 17. Identifiable intangible, patents, trademarks, and copyrights might only be 2. The reason we would pay 25 when we can identify only 19 is that there must be an additional 6 in value. That value is what we call goodwill. In terms of the journal entry, this is just a plug. After initial purchase, a company likely will have expenditures related to its assets. Examples include repairs and merchant maintenance, improvements. In the case of intangibles, we may have attorney fees related to the defense of the intangible asset. Like we did at initial acquisition, we have to ask and answer the question, should these expenditures be capitalized or expensed in the current period? The answer is as it was before. We need to ask and answer the question, to what period of time does expenditure relate? If it increases future benefits, then we will capitalize the expenditure as an asset. If the benefit relates only to the current period, then we will expense it on the income statement. That concludes part 1. In part 2, we will begin the process of allocating capitalized costs over the asset's useful service life. We'll use the term depreciation in the case of tangible assets and amortization in the case of intangibles.